Happy Friday, everybody. This is Joe Cusick, Vice President of Wealth and Asset Management at MoneyBlock and TradingBlock.com with your Traders Exclusive. Well, weakness in the tech sector, taking a look at the QQQs, they fell about 1% yesterday and they continue to fall early in the session this morning. That sharp decline yesterday and the continued decline today, it's broken that support of 111. There was a wedge in there, technically speaking. It's broken that. That's a bearish signal. You look at the overall tech trend, though, in spite of the action in Apple and some of the other big tech names, the Qs still remain well above that 105, 106 area. That's the area, if breached, we could see a turn in the market. Taking a look at the small caps, that's the sector that we want to watch as a true barometer of what's going on, both domestically and just in general with the overall markets, because that's going to be the canary in the coal mine. Now, they bounced from 122 in late July. They've stalled at 124, and they have turned down yet again today. This marks another lower high yesterday and today. And so right now, the trend since late June it still tends to be down. But I would argue that this is a correction in a larger uptrend. And so we want to see a break of 125 to the upside if we're going to see the health of this market start to turn, especially now that we're in August and we're coming up on when the Fed's going to meet in September. We're going to hear a lot more chatter on whether or not rates are going to be move. But that 125 level on the IWM specifically for the small caps is going to be one. If broken, we could see a resumption of the trend both in the small caps and then potentially in the overall market. Now, the consumer discretionary sector, I said this last week and I'll say it again. That's one of those offensive sectors that we want to keep an eye on because that's what's been driving the total trend so far this year. Now, yes, we're basically right around unchanged for the year, but the bulls have basically stayed solid because of the consumer discretionary, also finance and healthcare. Now, the consumer discretionary, if you look at it, looking at the XOY, they fell through to their support zone. But they're holding there. We want to see if that support zone is broken. If it is, that's going to be bearish. That's going to be a definite negative for the market because that's one of the offensive sectors that has been holding this market up as of late. Now, looking at the energy cycle and sector, I'm not one to pick bottoms, but there has been some short-term bullish momentum and divergences. You could see it in some of the oscillators that you might utilize in a technical sense. But these are some interesting happenings for yesterday, and we're seeing it hold up today. A little weakness, but we're seeing it hold up today. If you're going to see a breakout, in other words, if you look at the energy sector and you look at the sector ETF XLE, if you see that it goes above $69 today, that's going to be a confirmation of some bullishness coming into the energy sector, and we could see that the oil markets could be trying to form some sort of low and a bottom here. All right, folks. Well, that's it for this week's Trader Exclusive. This is Joe Cusick, Vice President of Wealth and Asset Management at MoneyBlock and TradingBlock. Wishing you a great weekend. See you next week.